Hi everybody, this is Gary Dima Sentiment Timing, and this is our technical video report for Sunday, June 1st, 2019. Hope you guys are having a fantastic weekend, and let's get started. So on Thursday, what we were looking at right here is this was looking like it was a bull flag, and what that pattern implies is that we were going to break to the upside. So I was leaving the door open for possibly a push up to the 28.15, 28.20 area. But what happened was we had President Trump laid some tariffs on Mexico, and that sent everything to the downside in overnight trading. So we got a big gap down, and I'm just not a big fan of shorting the initial gap down. And you can see that my takeaway from Friday was that the low was made in the first 15 minutes of trading, and from there we really just kind of were bouncing around. So I was looking to get a short position somewhere around the 27.77, or if we took out the lows of 27.49. So nothing happened. So I'm still hanging on to a third of I'm at one third of the new short position. I'm still holding on to the 29.42 myself personally. So what we're looking at is if we move down on Monday, let's take a look at the 60-minute chart and see where some possible support levels are. So that's going to be most likely this gap right here at the 27.44. So the low was 27.49. So if we take out this low, there's a good shot that we could get some bullish divergences in place. I think we would get some bullish divergences on the 15-minute chart too. So what that is implying, and we may get a big gap down on Monday, and that will just wash all this out. But if it's going to try just from a technical basis, trade, off of divergences. But one thing I just want to warn was what Woody was saying, where these types of black hole moves go viral. So a lot of the technical indicators will just give you false say readings, and it'll be ignored. So that's really the risk to this, is that happens and we just continue down, and then what we'll do is just wait for the next trade up setup. So when we gap down, what I was really looking for was, once it found some resistance, just to have a high and a low, so we know where things are on it. So if we take this low out, unless it's a gap down, I'm probably going to just watch the 27.44. So I'm going to remove the 27.49 just because we have that support right there. And what I want to do is just see how traders react to that. Now, if they come down and then we get a bounce, I wouldn't be surprised to see them try for that 2800 level, pop maybe to 2804, which is the 200-day moving average on the 15-minute chart. Now, if for some reason we do get that bounce and they get through it, then we're looking at a move up to the 28.15, and if they get above that, then they would have a chance of trying to come back up to the 28.40. So that's if the bulls do step in and we get some bullish divergences and that 28.44 level holds, I would be anticipating that we would get a bounce, and then we would just really watch for where resistance comes into play. I wouldn't be looking at this as a buying opportunity at all. And one thing that Woody really wanted to, we had a conversation on Friday, and he wanted me to get this point across, is that, the bigger picture right now is there's a real good shot we're coming down to the 26.48, and we possibly even could come down to this 28.76. So this is really the bigger picture, what you want to be looking at. No matter what takes place up here, we should be heading down here, and if it does go viral, like Woody's saying it has a very good chance of doing, we could be all the way down at these levels. So bigger picture, as much as I'm giving you really short-term stuff, you just want to really focus on bare minimum part as far as a target is going to be this 26.48. Then we would look somewhere, we have this fib retracement at 25.76, but there's really no price support, and that's one of the dangers when you have these kind of moves, is you don't really give yourself any support levels. So I really think that right now that this 27.20 area This is going to be important because well, yeah, 27, yeah, in this area, 27.15. It's important because if they lose that, I believe that we're coming straight down to this 26.48 level. Now, there is support right around this, the 25.76, 25.90 right here. But again, if the bulls lose that, then we could get a very, very fast move because there's really not a whole lot of support right here. So there's a few things that we want to watch. On Monday, if we don't get it, if we get a big gap down, then you really want to keep an eye on this 27.20 level and see how traders react there. If we don't get a gap down, let's say we come up a little bit and then down, we want to see how this 27.44, 43 area holds, because if it holds, we're probably going to have the bullish divergences, and from there we could take a look and see if we're going to get a bounce somewhere at this up to the 2800 level. And if that happens, that's where we would want to be paying attention and see if that is where some type of sell trigger goes, and if we get our momentum and everything back into, say, neutral or overbought levels. So if we do get a bounce, again, bigger picture, we're going down. We're just, I'm trying to give you guys the short-term support, resistance, and what triggers for sell signals. But if you're a self trader and you just want to build a position, something that Woody was saying is you don't really have to be perfect in this. You can take a position and just keep kind of layering in if we bounce, and then with, like I was saying, the overall target is going to be somewhere down into this level. So this is all noise until it goes viral, and we'll know it starts going viral because we're probably going to get a couple 0% bullish sentiment readings, and then from there Woody will give us some dates to keep an eye on. What would be a good spot, a date for some type of bounce, and that's when we would expect one of these bounces, these big moves that get a short covering rally, that move up 75 points, but then fail someplace and then head back down again. But we're right now, it hasn't gone viral. We're still sitting 13% sentiment readings. Even maybe after Friday's move, we may have a 5, but we're not getting any of that panic. And we know that on Friday that there was no panic because the low was made in the first 15 minutes of trading. So they've been bouncing around in this area, but that if there was panic, we would have just continued down and probably picked up some steam to the downside. So we're not there yet, and as Woody was saying, we're at the beginning stages of this. We're probably in the second inning of this a kill zone, as well as a possible black hole. So we want to be using any bounces to short, but we also just don't want to be shorting blindly, because it's if we do get one of those bounces, that is very common when we're in a move heading lower, is we get these big short covering rallies. So we don't want to blindly go. We want to put in set some parameters on it. And like I said, if we come up, the first thing the bulls are going to have to do is get it through this 27.68. If they do that, there's a good shot they could come up and try to close this gap at the 27.90 area. And then above that, this is the short-term bull bear line, and that's at the 2800. And then again, on the downside, if we head down, we want to keep an eye on the 27.42. If they get below that, then we keep an eye on that 27.20. And if we remember, this has been the target on the downside since we were all the way up here, and the reasoning was it was just a 38% retracement level, and we haven't had one from the lows that we made in December, so it would make sense. So what we want to do is just keep an eye on things. I'm not leaving my positions that I was looking to enter on Friday on. I will double check with everything and see what the markets, how they open, how support levels hold, how resistance levels hold, and then I'll throw out an email that way. So right now, enjoy the rest of your weekend, and I will talk to you guys tomorrow.